This is episode 531 of the Rio Grande Foundation's Tipping Point, New Mexico. I'm Paul Gessing, president of the Rio Grande Foundation, New Mexico's free market think tank. You can find out more about the foundation at riograndefoundation.org. I'm very pleased to be joined for this week's episode by Brian Domitrovic. He is a scholar at the Laffer Center. That is the Arthur Laffer Center, for those of you who know the history. And he is also the author of Taxes Have Consequences, which he co-authored with Dr. Laffer and Jeanne Sinquefield. Welcome to Tipping Point, New Mexico, or welcome back, I should say, Brian.
Yeah, thanks, Paul. It's really great to be here.
Yeah, we had a luncheon in Albuquerque this afternoon, and you spoke about the income tax history of the United States and provided our group with a lot of great information. And I wanted to go over some of that information and also bring new ideas and new thoughts into the conversation. First off, the history of the personal income tax. Now, I've read a lot about taxation, and I've always pegged the date of the first federal income tax at the U.S. Civil War. So is that when you peg things, or talk to us about when taxes really got started in the United States on the income of individuals?
Sure. Yeah, the U.S. Constitution of 1787 speaks of direct taxation, and constitutional scholars interpret that phrase to include income taxation. The Constitution of 1787 says that 1789 says that a direct tax, such as an income tax would be, where you specify an individual directly, where you have to pay this tax, that has to be taken up with regard to the census, which is to say that whatever proportion each state had of the nation's population, it had to assess its citizens' income taxes. So that's the kind of cumbersome mechanism of income taxation in the original Constitution of the United States.
So just to be clear, the idea that I think a lot of people, including yourself and the founders, had was that the states would act as an intermediary. It was
Exactly.
The old concept, I guess, back in the Roman imperial days was the tax collector had to generate whatever amount of money and bring it back to Rome. That was kind of the role that the states played under the Constitution until, well, at least the Civil War. But maybe there were different mechanisms with the income tax in the Civil War. Or was it just such an emergency that they kind of said, Constitution, habeas corpus isn't really a thing. We're going to let this slide too.
So there was an income tax in the Civil War of 10% on higher incomes beginning in 1862, and it was done at the state level by census or enumeration. So the states were assessed taxes that then they had to collect, including the states that were in rebellion. So the United States was taxing the Confederacy the entire duration of the Civil War. And then after the Civil War, those taxes were due. The United States ended up forgiving a number of those taxes. I believe it still was trying to collect Alabama's taxes as of 1872, but they just said forget about it. But yeah, the federal income tax apportioned by state was how they did it in the Civil War era.
Okay, so that was in fact an income tax, but it was definitely applied differently. And then you say 1913 in the 16th Amendment. I guess that's the genesis of direct taxation from the federal government and the modern tax code.
Yeah, so the income tax is so cumbersome to collect. And you have to remember, so when the Constitution was written in 1787, there was no chance the federal government was going to set up a revenue bureaucracy across the 15 states, or however many there were. It's just a practical impossibility. Of course, it had to be done at the state level. But by the time of the Progressive era in 1913, the federal government had confidence that we could build a bureaucracy that could collect taxes from every nook and cranny of the country, not just, say, the customs houses for the tariff. And so in 1913, the states and the Congress ratified the 16th Amendment to the Constitution, which enabled the federal government to collect income taxes without regard to a census.
All right. So is this the worst single thing that the U.S. federal government has ever did or done? Where does it rank on the misdeeds of the U.S. federal government.
Yeah, the income tax has not been successful, as goes some very important criteria. Above all, economic growth and economic opportunity in the United States. I mean, on modern reconstructions, growth was probably a third to 50% higher in the 125 years prior to the income tax than it has been since then. Inflation was unknown as any kind of long-term phenomenon prior to 1913. It was absolutely chronic afterwards. We've never seen anything like a Great Depression or even the stagflation era. Those things were sui generis, were unique to the income tax era. So the American economy certainly survived, in many ways flourished, given the income tax, but the negatives are large.
All right, so describe, kind of the history of the income tax circa 1913 and how, obviously it evolved dramatically and pretty quickly.
Yeah, prior to 1913, the main source of federal revenue was the tariff, about 33%, about a third was alcohol taxation. So one of the reasons, actually, that people lobbied for an income tax was so that they could go ahead with prohibition, given that alcohol revenue was such an important segment of federal revenue. They felt that, well, if we have an income tax, we could then ban alcohol and not feel the tax hit. So the first income tax was passed 10 months after the amendment passed. So the amendment passed in February, and the first income tax by statute came in October 1913. And the first rates were very low. It was progressive from the start. So the United States income tax has always had the provision that the more you make, the higher rate of taxation you will pay. So the rates of the first income tax, which were only in effect for the first 3 years, were 1, 2, 3, 4, 5, 6, 7%. So the top rate was 7% at the top.
Was that a conscious decision? Obviously, so progressive, to those who don't know, and you can correct me if I say this in any wrong way, but it punishes people the more you earn. Regressive taxes often are applied at the same rate, but progressive taxes, they're obviously higher the more you earn. So you're not just paying more taxes, you're paying at a higher rate. Was that a conscious decision at the time, though? Was that something that was kind of baked into the federal tax code initially?
Yes, absolutely. I mean, in the terminology that was used at that time was a graduated income tax. So they talked about it. It was, first of all, only on people with a lot of means. I mean, the first exemption from the income tax was $3,000, which today would be, $100,000. So if you made the equivalent of $100,000 today, you didn't even have to think about paying 1%. You didn't even have to file a tax return. So this was well above median family income or household income, as we call it today, to even begin paying income tax. I think there were, tax filers in 1913. So a pretty small percentage of income earners. And yet the United States was also the leader. There was no country with even an income tax of any note, let alone one that was graduated up to the level of 77%. So the United States was the leader internationally on this score.
So by that you mean we were the first nation to introduce an income tax?
Yes, on any serious. There had been attempts in places like Italy and Germany, and they were extremely minor. But the United States, and Emmanuel Saez, the tax scholar, makes a big point about this. The United States led the world in establishing a federal national income tax with the graduated rates.
Well, there are some things with America as a leader on that's good, and that's not one of them. So interesting to know that. So what were the economic impacts initially with the income tax as it was initially applied?
Well, initially, there are very strange international developments that put the income tax in a brand new light. I mean, the tariff had carried the load. 65% of federal revenue in 1912 was tariff from the tariff, and World War I hit August 1914 and just really shut down world trade to the United States. And so the tariff became a dead letter in terms of a revenue producer, and the United States had this income tax suddenly, almost fortuitously, coincidentally, to help to carry the federal revenue load. Just imagine, what if the United States had not had an income tax in 1914 when the guns of August rang out? I actually argue, therefore, that maybe one of the reasons the United States actually imposed the income tax in the first place was so that it could survive and prosecute warfare. I mean, you cannot have a federal tax base to prosecute warfare if your tax base is foreign countries who you're fighting against, or if your tax base is foreign, which is what the tariff was. So I don't think it's any coincidence the United States got involved in major wars, which it financed through domestic taxation once it had the income tax. And I'm talking about both World War I and World War II. I think they both were functions of the United States having an income tax.
Yeah, that you might often hear Laffer and Institute and his philosophy, associated right-wing, conservative, blah, blah, blah. But if the left cared, as they proclaim to, about foreign policy and a limited foreign policy for the United States, and we're seeing Biden blow holes in that as we speak, a limited government would be very much oriented towards a relatively modest foreign policy on financial reasons alone, huh?
Yeah, I mean, I think we always talk about countries prosecuting war as a means of domestic politics. I think it's simply a matter of record that the United States could not have fought World War I and World War II, or even thought of fighting those wars without a native source of taxation, which was the income tax. So therefore, I just flip it. Then therefore, the income tax caused those things. I mean, that's a very conventional, kind of spare way of analyzing history. I think a casus belli, in the American case of World War I and World War II, I think the income tax has to rank high.
All right, so pretty quick after we get the new income tax, rates go up dramatically. Talk about that.
Yeah, so it was only the first 3 years, 1913, 14, 15. It's actually divided by 4 in 1914, because the income tax was only applicable the last few months of the year. The rates went up from 1, 2, 3, 4, 5, 6, 7, and the top rate went up to 77% in 1918. Went to 67%, then 77%, and was there for a couple of years. And then it went down to 73%. So all of a sudden you had this super progressive rate schedule. And it's because the United States joined World War I, and we need all this revenue, and rich people paid, but they got out of taxable income pretty quickly. So the United States kind of went into the 1920s with an extremely high tax structure, out of the war by a couple of years, and the top rate of the income tax is 73%.
But things got better pretty quickly with the rise of Warren Harding, in my estimation, one of the we were talking I'm from Ohio, and Harding is one of the several Ohio presidents, often who don't get their due, but Harding, my favorite underrated presidents, and Harding and Coolidge combined to really get things back in line economically during the 20s.
Yeah, there was a horrible depression in 1920-21. Unemployment on modern reconstructions probably went to 18%. There was just a withdrawal of capital from the marketplace because paying investments were being taxed at 73%. I mean, the people who really had money or really kind of building things had to face these tax rates. This is actually the origin of the urban crisis and the transportation crisis. You see apartment building and housing developers just completely curtail their activities in the late teens and early 20s because of these high tax rates. Same thing with the railroads. And you had a bad depression in 2021. This is a couple years clear of World War I. And so President Harding, he came into office in 1921 with Andrew Mellon as his Secretary of the Treasury. We're cutting these things. And they had a series of tax cuts over the next 4 years, and that top tax rate went down from 73 to 46 to 25, and there it stayed. And during the Roaring 20s, I mean, it was just a legendary period of economic prosperity. And there were 11 straight budget surpluses from 1920 to 1930, with the biggest debt ever from World War I. So the tax rate cuts were perfectly productive of revenue at the top.
Now, the 20s reputation, I guess, is often besmirched by what followed it with the Great Depression, but you certainly lay blame elsewhere for the economic woes and just broad woes in general of the Great Depression. So talk about how things went wrong shortly there into the Great Depression.
Well, I've never understood the argument that the prosperity of the 20s had anything to do with the had something to do with the Great Depression. I mean, it was completely alien to the Great Depression, the Great Prosperity of the 20s. So in 1929, for example, the United States has a 25% income tax rate. There was a little rebate at the end of the year to take it down to 24%, but that was ex post facto. It has a 25% income tax rate in 1929. Well, it had a zero income tax rate in 1912 and every year before that. So, I mean, that's unprecedented for the United States to have that high an income tax rate. 25%. I mean, 16 years before, it didn't have a tax rate at all for its entire history. It also had a fairly sizable tariff in 1929. This is before the increase of 1930. So to say that like the 20s caused the 30s, I mean, already in 1929, you have a very large federal complement of taxation that you had never had before. So if there's going to be a Great Depression in the 1930s, the first thing I'm going to look at is the uniqueness of the large tax burden in 1929.
So tariffs and then followed by increased taxes. But real quick, it is worth acknowledging, while Harding and Coolidge were both Republicans, so was the president that really in many ways brought on the Great Depression. Why was there such a departure from Harding and Coolidge to Hoover, who seemingly would be more aligned with the Democratic Party or a party of much bigger government? What caused that departure philosophically for the GOP?
Yeah, so just to be clear, the United States passed some extremely large tax increases at the very beginning of what became the Great Depression. So the Smoot-Hawley tariff of June 1930 was the biggest tariff in American history. I mean, by 1932, it certainly was when the deflation hit in to increase the real value of the tariff. So the United States didn't need the tariff for revenue anymore. It had an income tax. I mean, the tariff had been a